You think about inventory turns, the inventory that need to be stay at the whole point from manufacturing home to consumer home is actually much, much faster in the retailer concept versus a traditional retailer. One of our companies going public right away. Right now, our portfolio company called ZTO Express, 中通快递, right now is going public. Actually, the management was here in Hong Kong yesterday. They are essentially the largest distributor or fulfillment agent, if you will, for the whole China's e-commerce system. They themselves doing 21% all the packages in China every day. So those type of things, we're talking about billions of packages every year that being delivered. But why finance? Why retail can reorganize value chain like that? Why finance cannot? That's the question. Why? And you could say our internet finance guy, haven't they tried hard enough? Or there's some other reasons? We can examine that. I mean, obviously, there are a lot more hurdles or a lot more handicap than streamline retail, than streamline finance, right? Because you have regulation, and we need to protect consumers and protect SMEs. It's a balance sheet business. There's a lot more complicated situations because of leverage. So you think about balance sheet business, essentially it's all leverage. And basically that meaning that for a bank, typical bank, which is 10 times leverage, if you make 10% wrong, you may bankrupt the whole bank. So that's a much more complicated situation and why regulation is relevant. We can't just say regulation is bad. I don't think that's a good idea to say that. We are enjoying, but we'll say we need smarter, more innovative regulation who actually keep up with the innovation. That's for sure. So what I'm saying is the way that finance is much more complicated and that harder for a startup to go to the internet finance area to say, I'm going to revolutionize the industry. I'm going to call me the king of finance. You just cannot do that. You could be king of retail. You just can't be king of finance. So that's a general concept. That's really, I say, the second half of the game is really about the technology that could empower traditional players, institutions, that they could leverage the technology using whatever, like there's so many more technologies fast coming. There's more about big data, how the cloud computing and combining all the computing power to be faster and more precise in offering products that are relevant and exciting for people. There's artificial intelligence, the blockchain, and all those things are driving those. And obviously, once you do all those things, there's the derivative products like risk management, like security, like compliance, like the way to deal with privacy. There's so many other derivative problems that you wouldn't have, or you wouldn't have to emphasize when you was in a smaller regional or localized situation versus a much more global, integrated, open loop situation. So that's I'm saying that really you think about the fintech. My first point is very simple. The game just started. That's really the fun. I think you guys are really born in the right period of time that you could embrace something that's really truly exciting. I think forthcoming in those areas. I'm going to give some examples to sort of illustrate what I talked about earlier. So I think this is a great time for young talents, and so that's some quick number. So obviously, you could see there's also a gap of technology and capital following, innovation. That could be a bubble in that period of time when there's a huge jump in financing, and we are seeing. If you group them together, essentially the size of the bubble is the funding. So how much money that vertical has been sub-vertical within the fintech that has been attracting the capital. You can see that there's a lot of attraction to the areas of payment, lending, and insurance. All those areas that we see And obviously, if you look at the landscape, there have been companies in the payment space like Stripe and Square, and the PayPal. There's a lending space from Lending Crack, Cabbage, and there's also in quad financing, consumer banking, a number of areas that we are looking at. The number of areas. So I want you to use. If you think about there's twin engines of innovation, the whole internet innovation, the twin engines, I would say, U.S. and China, that are really driving so much about innovation. Let's examine those two markets and to see what are relevant to us, and we can talk a little bit more about this area. So why? So what's the macro drivers of the U.S. Innovation? One thing is we are in a really unprecedented time. I think this is the lowest interest rate level ever recorded in the human civilization. So it could be say 1,000-year civilization. I think the behavior of people lending to each other. You could say before there's even a central bank or even commercial bank organizations, that people always have the behavior of lending to each other, helping each other. And but you think about that as a lending relationship, I would say this is probably the lowest ever. So that has driven very little, no savings. Actually, strange enough, with very, very low interest rate, it actually doesn't make the pie grow. Actually, it makes the pie even smaller. The needs for loan, despite at lower interest rate, a lower cost of borrowing, actually slowing down dramatically. You're seeing even high growth market like China, the needs for loan, needs for credit expansion, also, just decline dramatically over time. That's a global phenomena. That's a low interest environment, yet having generate real substantial growth, demand for growth. And there's a limited options as we're facing another issue, which is not only the debt issue, but also demographics issues, that as we all get into a more aging society, that there's more people need on the pension. That's going to be a harder issue to have them getting paid on a retirement savings if we cannot generate any yield. I mean, deeper question we can ask about policy implication of the economy, about the productivity gain, whether we are in a perpetual structural sort of low growth environment. We can debate that forever, but that's the macro backdrop of the fintech, because the people are just tired of looking at things that don't produce them anything for their assets. So I talked earlier that what's the sort of behavior change of consumers, that you are seeing that essentially people already started to form the habit of using their mobile phone and their PC internet to access information, and traditional financial services firm, yet very slow to respond to that. So there's a consumer change shift versus the needs of the and the supply of the financial institutions provide relevant products. So there's all those innovators. I'm using examples from personal loan, from places like Zest Finance or Lending Point to home loan. That's another big product of all those commercial banks, personal and financial home loans. And student loans, as you know, that there's students should not be penalized because of their temporary cash flow problems, and how do you make sure that they could have the opportunity to do what they want based on the future cash flow, and how to be better customized for this segment of the student customers. Banking. So essentially, if you go through the whole sort of the traditional portfolio of the consumer-oriented financial institutions, from loan products to asset products, wealth management product, that there's many ways of consumer to keep on asking more, a better connection, more relevant, more exciting products, and lower cost. In terms of places like Betterment or Wealthfront, essentially they are providing ETF products which much more convenient asset rebalancing needs across asset class, much lower cost than they would do it by themselves. Kind of inspired by, by the David Swensen's theory of pioneering portfolio management. You have a wide, diversified asset portfolio, yet you're also being very much within each asset class. You pick the best ETF concept. So that's a concept, and put it online, so it's able to resonate very well with educated, public. And obviously, there's also investing, trading. There's a lot of, essentially that's part of the value chain that connects with people when they decide to make the investments. There's a number of things, derivatives out of this as well. Insurance, we talked earlier, insurance is another example that there's a huge information asymmetry, that there's people who truly believe that they are penalized for other irresponsible behavior of some other people. Well, their pressed information is so much on an average basis instead of based on a personalized solution relevant to people. Also, there's a huge selling cost to the whole insurance. Hong Kong, it's not legally required, but you look at a number of other places that's legally required to disclose commissions. Just look at how much intermediaries making money out of this, of the selling of the insurance, which is, is really something shocking. So you look at those numbers, just shocking numbers of how much that cost associated with this selling of the products on insurance and wealth management as well. So recently in the U.S., there's have been a Department of Labor DOL ruling, essentially assigning the fiduciary duty to the wealth advisors, and so that they have to take a fiduciary duty, not so that there's a potential conflict of interest if they trying to sell high commission products. So what that implication is that whether you are able to continue to create value for consumers and investors in this space. And there's also financial portals. What do we mean by financial portals? Essentially, it's an assembly of all the relevant information that in a one-stop shopping for consumers who want access all their financial information. In China, there's a company that we invested called 51 Credit. It's quickly become the leading player in China that essentially sort of gathering all the information of consumers, their behavior, started with them when they sort of make a note of where they spend the money, and over time, and able to understand better where the consumers are they spending money on the right thing, what type of the behavior they have, are they repaying their credit behavior. So those very complementary to today's China's ecosystem because of the lack of credit score system. In the U.S., credit score used to be a sort of a payment-oriented business because you have to pay to get your own credit score. There's 3 credit agencies doing that. And what a number of companies do, essentially they are using free credit, like Credit Karma, saying that I'm going to give you a free credit report and you can access any information about yourself. Then you use that to get consumer to be locked in their website, so the consumer keep on contributing more data. And as they become the consolidator or the information portal of the consumer financial needs. So far, I would say the key success factors of those fintech company are superior user interface, free, as always, starting with the internet freebies, and brand building and word of mouth. Well, I think, as I said earlier, there's still really just starting the game. There's more potential on that infrastructure change as well. That blockchain could be an infrastructure change. That in the sense that instead of being on a centralized sort of information system, blockchain is much more distributed system, so that all the ledgers and accounts are distributed in a non-centralized way, so that consumers and banks and all the relevant agencies can access them in an independent manner. So we are seeing a number of innovations related to this area, where I'm not a big fan of Bitcoin. I don't think that anytime soon that you could disrupt central bank's money printing capability and it's creating another completely independent currency. Well, I'm also a big believer that blockchain can be used in a number of ways, from legal documents to the accounts management to third-party settlement. There's a number of ways that blockchain can be used. So I think there's, we are seeing innovations in those sort of consortium-based blockchain services that banks together or agents together, they form a society that adopt a similar standard and software to use the same blockchain services. So I'll quickly go through China as well. And China, in addition to what we said earlier on like the U.S., mostly the pain points related to consumers, there's China's a lot of pain points actually even related to SME on the asset side. So if you think about the U.S., the pain points mostly about the consumers not able to access in a cheap, efficient manner the right assets. Yeah, well, China still have that, but also China's SME traditionally don't get any financing, don't get any lending from the state-owned banks.